Hello, welcome back to another video. I am CJ, and today I will be going over my NASDAQ or NQ, the futures contract trade breakdowns slash recaps. It was about 12 RR throughout the trade setups using market maker models, inversion fair value gaps, and the anticipatory breaker strategy. It's probably a little more or a little less, but I wasn't able to capture it all. But without further ado, let's just get into this recap. So, starting with the inversion fair value gap model, I took on NQ. I believe it was on Monday, and it was a inversion fair value gap with a change in state of delivery order block entry. So as you can see here, NQ inversion fair value gap for our internal range liquidity to external range liquidity, 15-minute redelivery. And I have our little representation right here, a order block change in state of delivery, which also inversed this fair value gap. These are really high confluence as you can put your stop below the order block due to the fact that if the trade is valid, price should not return or go lower than that order block in the inversion fair value gap. Do your own due diligence, do your own back testing, but that's basically the model that I took. You can see here low resistance liquidity buy side. This is just an example. This trade took place during the New York AM kill zone. The bias was bullish as our objective bias was ERL, external range liquidity, after delivering from internal range liquidity. We had failed to displace lower on the 15-minute continuously holding bullish PD arrays. We failed to take any kill zone liquidity like London or Asia, which means the market has an objective to be extremely bullish in nature. We had news at 10 a.m. PMI, which aligns with the classic 10 a.m. reversal. And since we got our open, low, high close of our 4-hour candle for the 10 o'clock, as it still respected bullish PD raise, it set up a perfect inversion paired with a order block, change in state of delivery entry. As you can see here, here is our news at the top. And now we are on the 4-hour. Our next objective is external range liquidity. As you can see here, we had these pending orders as our external range liquidity right here, pending buy stops. We took out that external range liquidity, then price immediately went down to internal range liquidity, and you can see these 4-hour candles continuously respected it, which hinted at higher price action. Then, if you look onto the 15-minute, we had Asia marked out and London marked out. Asia low, London low. Price failed to see both of these kill zone lows, along with the fact that we were respecting a 15-minute buy side imbalance, sell side inefficiency, which is just a fair value gap. And then this fractal buy side imbalance, sell side inefficiency was continuously being respected, even at the 10 a.m. news. So, as you can see, right here, it was about 9. This was before news. I said pending orders and our setup. We had equal highs that we wanted to target. As you can see, we just continued down. This was an area of interest. I believe it was the higher time frame fair value gap that we tapped into. So I was looking for a setup here, but then I reminded myself that this could also be the C leg for ABS as it formed in the macro. But I remembered we had news. So then I said our setup was looking perfect, but I didn't take it because of the 10 a.m. reversal, as you can see here. And price even then failed really to close above that inversion. But then I ended up taking one right here. As you can see, I wasn't really able to capture it because I had to take it on my phone, which I apologize for, and I will probably attempt to just make better slideshows or keep in mind. But this, as you can see here, was our order block. This was our entry inside of the 1150 to 1110 macro, I believe. And we entered here, continuing higher. We swept our first which means stops were at break even, and then we just continuously went higher and higher and higher for about, I believe, a 1 to 6 R. As you can see here, we continued higher. You get a better representation. We entered right around here. It was a higher time frame inversion, and we continued with stops below that order block. Or it was probably this inversion here. So as you can see, potential pyramid ideas right there, but price was going all the way to our TP beautifully. NQ, anticipatory breaker strategy. So this was a NQ anticipatory breaker strategy for our external range liquidity to internal range liquidity again. This time we did in fact have news. We had unemployment claims and a FOMC member Barkin was speaking. So we had that around 8:30 a.m. So after 8:30 a.m. we were able to catch a trade. As you can see here, I have the model. I'm not going to teach the model because it's not my model, but I have its diagram out on the right. And time, just for the C leg, is usually news, macro, lunch retracement, PM distribution, 9:30 equities open, and the other one 8:30 open or 8:30 manipulation. So this trade was taken during the New York AM session post 8:30 a.m. news using Adonomics ABS model. The bias was bullish as we were delivering from a 4-hour and 1-hour buy side imbalance, sell side inefficiency with a SMT on ES delivering from internal range liquidity to external range liquidity, targeting a strict 1 to 2 RR. Once I got manipulation with the leg lower, equities open pushed us up towards our price target with the equal highs resting above as we swept equal lows. So as you can see here, external range liquidity was swept, which then we came into internal range liquidity, which means our next objective was this obvious pending order buy stops right here, being the external range liquidity, which was also near all-time highs. So as you can see here, we had a SMT with ES, with NASDAQ prices going from internal range liquidity, respecting this buy side imbalance, sell side inefficiency on the 15-minute as well. And Asia and London, both lows were swept, but their highs were still intact. So after we delivered and respected the bodies, we knew we wanted to see bullish price action. So we had our A leg, we had our B leg forming these relative equal highs that was also resting within a sell side imbalance, buy side inefficiency. We had relative equal lows here and just a lot of accumulated sell orders, which we then further manipulated with the 8:30 open, which was our C leg, news manipulation at 8:30, which then we wanted to see price inverse this fair value gap right here. And that's exactly what it did. And it formed a beautiful setup. Price inversed it really high, and I wanted to see it retrace right here, and which it did, which then I entered to go and go for these relative equal highs that were right here. And as you can see, price hit that and continued higher for the rest of the day, but I strictly targeted a 1 to 2 RR. So this is the last model, the NQ inversion fair value gap with the market maker buy model. So as you can see here, we had NQ inversion fair value gap plus optimal trade entry plus a market maker buy model entry. And this is also Dodgy's one setup for life, where I have it on the right here. You have equal highs with a bunch of low resistance liquidity, which then we tap it to a higher time frame fair value gap, sweeping sell side, and then we inverse from the leg that tapped into sell side. We inverse one of the inefficiencies, so a fair value gap, which then we go and target the equal highs. So the trade was taken during the New York AM session. No news was on this day, but we were at all-time highs. price failed to displace lower, and we dropped into a high time frame PD array with resting accumulation and equal highs at the top. We tapped into a 15-minute buy-side imbalance, sell-side inefficiency, which triggered a smart money reversal. We also had a entry model slash low risk buy as we tapped into a high time frame PD array and got a inversion. Got in late, but it was a beautiful setup as macro pushed us to the highs. So, as you can see here, there was no high time frame confluence as the weekly, daily, 4 hour, and 1 hour. They were all just bullish. There was nothing for price to retrace to. Everything got balanced. So we had to look onto the 15-minute, and from our dealing range high to the dealing range low, if we were to take that, price dropped into optimal trade entry, and it failed to take London low or London open, or you can even count this as London low, and failed to take Asia low, which indicates that we were bullish in nature and wanted higher price action. OT, the optimal trade entry, was hit within a discount, with this buy side imbalance, sell side inefficiency being respected, this being inversed and then respected, which just indicates higher price action in general. So this was the trade I took as we tapped, as you can see in here, into a high time frame sell side balance, buy side inefficiency. We created a beautiful inversion, which I would have entered off of here, but I got in a little late. I could have waited for the retrace, but I decided it's better to get some of the move than miss it all, and I didn't want to risk it, so I took my trade here. And of course, macro came in, pushed us into that fair value gap, which that's also a 2022 model. And as you can see here, I tapped into this fair value gap, but we continued higher as the macro eventually pushed us towards our price object pretty beautifully, barely dipping below as we had obvious draws. This was also a market maker buy model because we had resting accumulation right here. Accumulation, and then the distribution, reaccumulation, redistribution, smart money reversal, low risk buy, and then the price continued on higher for that day. Profits shown, as always, we had 1,400, 1,470, 165, and $975. Now, these were taken on demo, and Monday's profits aren't shown because I forgot to screenshot them. Wasn't all of them, but I forgot to screenshot. So obviously it was over 4,000, but this is all I could retrieve. But other than that, that's pretty much the end of the recap. If there's anything I could have done differently, anything I could clarify on, or anything I could do better, please let me know in the comments below. If you enjoyed this video, make sure to like and subscribe, and make sure to turn on the post notifications and comment down below something you learned. I will be releasing videos every Sunday around 5:30 EST, so stay tuned for these informative lectures.